Ladies and gentlemen, welcome to the Akums Drug and Pharmaceutical Limited Q4 and FY'25 earnings conference call hosted by Ambit Capital Private Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Pranav Chawla from Ambit Capital. Thank you and over to you, sir.
Thank you, Ria. Good morning, everyone. I'm Pranav Chawla on behalf of Ambit. Welcome you all to the fourth quarter and FY'25 earnings conference call of Akums Drugs and Pharmaceuticals Limited. Today on the call we have the following management members: Mr. Rajeev Jain, Managing Director; Mr. Sandeep Jain, Managing Director; Mr. Sumit Sood, CFO; Mr. Sahil Maheshwari, Head Strategy. I now hand over the call to the management for opening remarks. We'll follow this with Q&A. Thank you and over to you, sir.
Thank you, Pranav, for the introduction. Good morning, everyone, and welcome to Akums Q4 earnings call. I'm Sahil. Let me draw your attention to the fact that on this call, our discussion might include certain forward-looking statements, which are predictions or projections of the future events. Our business faces several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied in such statements. As Akums, we do not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events, or otherwise. Having said that, I hope you all have gone through our investor presentations and financial results that we posted yesterday. I would now like to hand it over to the Managing Director, Sandeep Ji, to discuss our performance. Thank you.
Thank you, Sahil. It gives me immense pleasure in declaring the Q4 and full year FY'25 results of your company. While your company started its journey in 2004, FY'25 will remain etched in its memories as it got listed on the stock exchanges on 6th of August 24. We once again extend our sincere gratitude to all stakeholders and remain committed to creating long-term shareholder value. As you are aware that FY'25 has been a year of significant volatilities for the industry, that is domestic pharma, we witnessed significant price erosion in API as well as muted volumes. This impacted the core CDMO business as well as further delayed the turnaround of the API business. This results in flat revenue growth of your company. However, despite these headwinds, Akums grit the spirit shown through and we managed to maintain our margins and generated healthy cash flow. The Q4 volumes grew up by 9% year-on-year, while the FY'25 volumes grew by 1% higher than the overall market volume growth. We increased our R&D spend by 16% to rupees 130 crore. We continue to add new growth levers to boost our performance in fiscal 25. We launched 31 DCGI products, including the recently off-patent amlodipine and its combination Sildosin and Mirabegron bilayer tablet, amongst others. We also expanded recently capabilities for nasal sprays, eye drops, bilayer tablets, ampoules, and FFS small volume parenteral as well. We continue to increase our niche portfolio offering to our partners. Your company also operationalized a new injectable facility in Q2 FY'25, which will further cement our sterile drug leadership in India. In the coming year, we have a capex plan of approximately 300 crores, wherein we will expand our product offering by setting up lines for oncology, steroids, FFS, LVP, amongst other things. We took noteworthy steps toward becoming a global CDMO by signing an approximately euro 200 million contract with a global pharma company. We have already received part consideration, that is euro 100 million in April 25. The supplies for this will commence in 2027. We also got audited by Anvisa in April 25 for our injectable facilities, and hopefully we will receive approximate approval in next quarter. Our in-licensing products of Triple Hair, Canada, CARES and Korea are on track and undergoing trials and regulatory submissions. Discussions are also progressing well with Zambian government to finalize the modus operandi and form a manufacturing JV. These are exciting times as we continue to build a global pharmaceutical company. Now moving on to operating performance. Operating performance of the company in Q4 was robust, with overall revenue growth 12.4% and adjusted EBITDA growing by 13% year-on-year. For the year, our performance was flat for both revenues and EBITDA as compared to last year. As we mentioned, this was largely on account of price erosion of APIs, as our revenue are built on cost-plus model, where cost of input API and packaging metal are passed to the customers. Further, with muted industry volumes, the overall demand in Indian pharma market was soft. FY'24 has had a sizable product development contract of INR 126 crore. If we exclude it to account revenue from manufacturing services, CDMO revenues grew by 2%. API EBIT losses continue to on their downward trend as we continue to focus on bringing profitability to this business. Beyond Indian markets, we are also exploring global markets to improve realization. Over 10% of our sales in FY'25 was international market. Over the next 12 to 18 months, we expect to enter the European market with 3 CP approvals. We invest around 4% of API revenues in R&D to improve margins profile of existing portfolio and build dossier for European market. Our domestic branded formulation business continues to do well with 9% revenue growth and 12% EBIT growth for the full year. Our IPM ranking improved to 58 in FY'25. Our PCPM improved approximately 20% over the last 3 years, while we also added around 14% new sales professionals to our team. We continue to focusing on specialty physicians with 70% of our coverage being specialists. Further, 70% plus of our portfolio is chronic, with focus of gynecology and cardiac diabetes. The international branded segments has been performing well for the last few years, registering over 25% CAGR since FY'22. We are present in 50 plus countries across Africa, Southeast Asia, and penetrating into European, Latin, MENA regions. Over the last 3 years, our 450 dossiers were registered in various global markets, showcasing our R&D and regulatory strengths. Now I will hand over to Mr. Sumit Sood, our CFO, for the financials.
Thank you, Sandeepji, for the insight. I'll take you through the financials of the company. If we look at the full year consolidated numbers of revenue, we were at 4,170 crores. This is 1% lower than last year, which was 4,212 crores. Adjusted EBITDA for the full year was very similar. On exact numbers, it was 2 crores lower. PAT for the current financial year is 234 crore as compared to 220 crores in the previous year. If we'll go to the quarterly numbers, the March total income came to 1,073 crores. That is 12.4% higher on year-on-year basis. 954 crores was for the quarter ended March 24. And it's 5% higher than the December quarter. If we look at the adjusted EBITDA for the CDMO business for the Q4, it was 111 crores compared to 98 crores for March 24. This is 13% higher, but it is 18% lower than the December 24 number, which was 136 crores. Our PAT stood at 44 crores. It was similar to what we did the last quarter. However, this was lower than Q3, which was at 66 crores. If we look at what we've done for our financials is that we were presenting 3 segments. We have sort of further broken that into 5 business segments, and we will probably tell you the results of each of these segments separately. For the CDMO, if we look at the overall revenue, it was at 3,208. It was 2% lower than last year. EBITDA for the full year was lower by 7%. If you look at, we were at 487 crores last year. We touched 454 crores this year. For the quarter ended March 25, revenue was 840 crores. It is 15% higher than the last quarter and 7% higher on quarter-on-quarter basis. EBITDA for Q4 was 89 crores, 9% higher year-on-year basis, which was 81 crores for March 2024, but 27% lower on quarter-on-quarter basis, where it was 121 crores. If we look at the business that is on domestic branded segments, the overall full year revenue was 434 crores. It is 9% higher than last year, which stood at 398 crores. EBITDA for the full year stood at 77 crores compared to 68 crores last year. This is 12% higher. For the quarter ended March 25, the revenue was 104 crores compared to 94 crores, which was in March 24, which is 10% higher year-on-year basis. However, 6% lower quarter-on-quarter basis, which stood at 110 crores. If we look at the EBITDA for the Q4, it was 22 crores, 11% lower on year-on-year basis, which was 25 crores in March 24, but 10% higher on quarter-on-quarter basis, which stood at 20 crores. The international branded segment has done a total revenue of 143 crores compared to 125 crores last year. This is 14% higher. EBITDA for the full year stood at 28 crores compared to 24 crores last year. It stood 15% higher from last year. For the quarter ended, the revenue was 40 crores, which is compared to 21 crores, 86% higher year-on-year basis, however 7% lower on quarter-on-quarter basis. EBITDA for Q4 was 7 crores, significantly higher than 2 crores for the quarter ended March 24, and 12% higher on quarter-on-quarter basis, which was 8 crores for the quarter ended December 24. API business, as Sandeepji had explained, our endeavor is to see how we can reduce the losses. So if we look at the total revenue, this year we did 219 crores, which was higher than last year, but very nominal, which 6 crore rupees, so 3.2% higher. For the full year, the EBITDA losses would marginally decline from 44 crores, which stood now, and last year it was 46 crores. For the quarter ending March 25, the revenue was 50 crores, 10 crores higher year-on-year basis. However, 20% higher on quarter-on-quarter basis. For the quarter ending March 25, EBITDA losses declined to 6 crores from INR 8 crores. The trade generic business, the total revenue stood at 115 crores, rupees 62 crores lower than last year, which stood at 176 crores. For the full year, the EBITDA losses have slightly declined to 28 crores from last year, 33 crores. The quarter ending revenue was 22 crores compared to 30 crores in the previous quarter. For the quarter ending March 25, the EBITDA losses were higher at INR 10 crores from 7 crores in Q4 FY'24. The operating cash flow for the group continued to be positive and healthy. We were at 465 crores, 498 crores for last year, and the cash conversion ratios stay at above 90%. The free cash flow also stood at 201 crores, 212 was for the last year. As Sandeepji during his session mentioned that we on the 9th of April got the part payment for the UGMP contract, we got 950 crores. We had the surplus cash of 566 crores. So the company today has a war chest and cash surplus of 1,520 crores. Our working capital stays healthy. The net working capital has improved from 99 days to 91 days. And we are pretty, happy to announce the results of the company. We would request you for your questions now, and we will collectively try to answer all of them.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Vivek Agarwal from Citigroup. Please go ahead.
Hi, thanks for the opportunity and congrats on a decent set of numbers. So FY'25 was a bit challenging because of the pricing and all these things, right? So how to look at the numbers as far as the CDMO business is concerned in terms of growth and margin profile for FY'26? Thank you.
Thanks, Vivek. Sahil here. So, rightly said, so even look at now, the volatility in API prices still continue. While we initially thought that it would subside in a few quarters, but honestly today we still see a downward trend in APIs. Right, so since it's a cost plus model where almost half of our cost is APIs in our transfer pricing, right? So giving guidance really on the top line is tricky at this point in time, given the API prices still continue to be soft. What we can do is give broadly a volume guidance. As we mentioned, we grew 9% quarter-on-quarter volumes. So the volumes are coming back, right? So that internally means that either the inventory is getting destocked or there's inherent demand of the new products that we have launched. Right. So what we expect in FY'26 is that we'll have a single high-digit volume growth. On top of it, if the API revenues, if the API prices stay same, then we'll have a similar revenue profile. If the API prices continue to move up to their average levels, which are currently very low, we'll have a better revenue growth. But as of now, since the API is volatile, we cannot say it, but the volumes will be in single high-digit, which you obviously know it is much higher than what the overall IPM would do.
Understood. And in this quarter, CDMO business grew quite decently, right? But the margins were slightly on the softer side. So would you like to explain basically how or what caused quite of volatility as far as the margins are concerned?
Sure. So while this should be looked at a quarter-on-quarter, Q4 to Q4. So Q4 usually has a product mix or a product profile which is of lower gross margins compared to the other quarters. Right, so that remains there. So if we look at really 9 months and 3 months of this quarter, so broadly more than half of it was on account of higher COGS, which is a product mix. But this is a quarter-on-quarter phenomenon. This we saw last year, the year before, and so on. So this is why it should be looked as an annual business, which we continue to maintain a similar guidance on. And that partly mostly explained, and Q4 also has some bonus payouts and provisions. So that's a minor part of it, but largely it's the product mix which drove down the margins.
Thanks. And just last question before I jump in the queue. If you look at trade generic and API revenues, API business, right? So it is continuously, I think, loss-making. And if you look at quarter numbers, trade generic losses have been widened. So what is the thought process around this business, continuing this business going forward? Thank you.
See, trade generic हम लोगों ने 2-3 साल से देख रहे हैं तो हम बहुत अच्छे significant positive results नहीं देख पा रहे. So now we are in the process of consolidating this business और at least to maintain कि ये losses जो हैं हमारे future में आगे अगले साल के लिए नहीं जाएं. तो we are in the process of consolidating this business.
और sir, फिर API का?
Yeah. As far as API is concerned, so we are still there in the business and will remain be there in the business. We are trying to curtail our losses. पिछले साल हम बहुत ज़्यादा losses को curtail नहीं कर पाए और revenue के ऊपर भी हम बहुत ज़्यादा इसको positively नहीं ले रहे थे. Around 10% of the volume growth, revenue growth हम plan कर रहे हैं और उसके अलावा हम लोग जो losses हैं उसको भी significantly कम करने के लिए plan कर रहे हैं.
Just coming back on trade generic. So when you say consolidating the business means overall reducing the overall footprint or overall size of this business, is that a right way to understand?
बिल्कुल राइट, आपने सही समझा कि हम इस बिजनेस को मतलब इट इज नॉट लाइक वी आर गोइंग टू जीरो डाउन दिस बिजनेस. जो पोर्शन इसमें पॉजिटिव है और प्रॉफिट मेकिंग है, वही पोर्शन से हम उसको आगे लाइव ऑन करके रखेंगे.
Thank you, sir. This is helpful. That's from my side. Yep.
Thank you. Next question is from the line of Gautam Gosar from Monarch AIF. Please go ahead. Mr. Gosar, you can go ahead with your question. As there is no response, we'll move ahead to next question. Next question is from the line of Abdulkar Punawala from ICICI Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity. First on the CDMO growth this quarter, so partly you explained about volumes. Is there any pricing element also in this particular quarter? Have we been able to increase prices, or is the mix has just changed and due to that there is a better realization?
So, आप अगर broadly देखोगे, what we have also done in our investor presentation, what we did, we tried to show a waterfall around it. And as the gross margins of the overall CDMO business has improved up. So the product mix overall improve हुआ ही है. This is partly on account of the DCGIs which we have constantly strived for. This year also we received 31 of them. And also on account of improved product mix. अगर हम देखेंगे तो हमारा जो niche form है, which is classified as base and niche being everything which is research driven or tough to manufacture or injectables and so on, वो हमारा एक 20% CAGR से over the last 3-4 years बढ़ रहा है. So the gross margins are improving in this business.
Okay. Understood. And secondly, on any color on the sickle cell product launch, are we now looking this for an international market opportunity only? On any color on when the uptake will happen in the India market?
सिकल सेल में हमें बहुत सारी अपॉर्चुनिटी, अभी भी विजिबिलिटी, अगर हम कहें क्लियर कट विजिबिलिटी, तो वी आर नॉट अवेलेबल टू सी दोज क्लियर कट विजिबिलिटीज, लेकिन स्टिल वी आर वेरी मच होपफुल कि ये एक बड़ा बिजनेस है और जब भी मार्केट इसको रियलाइज करेगी या जो भी इसके कंज्यूमर्स हैं तो वो अगर इसको रियलाइज करेंगे तो इट इज गोइंग टू बी ए बिग बिजनेस एंड बिग मार्जिन प्रोडक्ट्स एज वेल. और हम इसके अंदर अकेले ही हैं जो कि पेटेंट होल्डर भी हैं और हमारी कॉस्ट भी इसकी काफी कम है इंटरनेशनल प्रोडक्ट से. बट हमने इसको अपने फ्यूचर गाइडेंस के लिए फिलहाल इसको हटा के रखा है. Whenever there will be a revenue or the profit, it will be an add-on to our guidance.
Okay, sir, understood. And so next, you have received this 100 million euro from the export order. So, I mean, how do you plan to deploy this cash? Would that be on the books till the time commercial supply starts, or is there any plan to utilize it before?
So Abdul, the way we are looking at it is that we are looking at opportunities which will have synergic benefits to the company. Right now, the money is parked, well invested, but businesses which will have synergic advantage with us, profit-making businesses, is what we will probably look at.
इसको दो तरीके से देखेंगे. वन इज द स्पेसिफिक मनी विच हैज बीन पार्क्ड, वो उसका एक पर्पज है और उसको उसी पर्पज में यूटिलाइज करना है जैसे जैसे हमारा प्रोडक्ट आएगा. बट बिकॉज वी आर कैश पॉजिटिव, तो हम वी आर लुकिंग फॉर सम मर्जर एंड एक्विजिशन अपॉर्चुनिटीज और डिफरेंट टाइप की मर्जर, ऑफ कोर्स विद इन द फार्मा स्पेस ओनली, और जो प्रॉफिटेबल हो, जो की वैल्यू ऐड करे हमारे सप्लाई चेन को, हमारे प्रोडक्ट मिक्स को और हमारे क्लाइंट बेस को. तो उस टाइप की हम अपॉर्चुनिटीज को देख रहे हैं, बट सर्टेनली प्रॉफिट मेकिंग बिजनेसेस को हम एक्सप्लोर कर रहे हैं. एंड वी आर वेरी माइंडफुल कि हम जो भी पब्लिक का पैसा है, जो ये पैसा है, इसको ऐसी ही जगह लगाएं जो कि वैल्यू ऐड करे हर एक स्टेक होल्डर के लिए.
Got it, sir. And sir, finally on top line guidance to the any color on EBITDA, how would the EBITDA margin or absolute EBITDA look like for next fiscal 26?
So Abdul, उसी को एक बार बिजनेस वाइज तोड़ते हैं. So CDMO will remain similar margins to this year, है ना. Acumentis and Unosource are already high margin profile compared to the overall average corporate, so वो भी similar margins of 18 to 20% है. as sir was explaining कि हम consolidate कर रहे हैं, so the magnitude of losses in the trade generics we still have to think through, but will come down. And API we are significantly focusing on how do we reduce losses. अगर आप Q4 को भी देखोगे तो खाली 6 crore का EBITDA loss था उसमें, right? So we are significantly working on how do we bring down these losses. तो जो 3 businesses हैं will maintain a similar margin profile, and the loss making couple of businesses will see losses coming down. So the overall margin profile of the company will move up.
Got it. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Madhav from Fidelity. Please go ahead.
Hello. Hi, good morning. Thank you so much for your time. My first question is on the trade generic business. So here the revenue has been coming down from us consistently, right? Like if I look at FY'22, we were at 500 crore plus revenue, which is now 100 crores. But the absolute EBITDA here has actually gone up from 20 crore to 28 crores. Could you explain what is happening here? Like we've scaled down this business consistently, but EBITDA is still higher. And I mean, how difficult is it to just close the business and just bring the losses to zero? Because I'm not really sure what we're trying to do here.
Sure. So thanks Madhav for this question. So essentially अगर हम business देखें, trade generic business में 2 characteristics हैं. One is it is characterized by low pricing. ठीक है. So in an absence of quality parameters, I think pricing is what demands the overall channel play. The second is the working capital requirements of this business is high, right? So जो आपका question था on EBITDA, this is why we have scaled it down essentially, that the profitability of this business is consistently deteriorating across the board and very significantly for us. Right, so जितना भी हम करें, the COGS is significantly higher for us, है ना? So that is the reason the margin profile is coming down, and as well as given the working capital needs are high, and there are some provisions and write-offs in this business, तो हमें एक EBITDA loss उसमें ज़्यादा आता है. That's the overall reason why we think that while we have over the last 2-3 years seen how we can turn this around, but given the current scenario of the business where a branded play significantly helps you in a trade generic business, and since we are largely a CDMO business, in an absence of a large branded play, we don't see this as a meaningful opportunity to us.
So that's exactly my point. Like, why don't we just close it? Like, just take the revenue to zero, and then the EBITDA loss should go away, right?
So, Madhav, so there's a working capital in the business, right? So, if I immediately turn off the plug, so that money is a risk that entire working capital might get provision for. So there are active efforts wherein we'll reduce our exposure on the working capital, and when the time is right, we'll take a call on shutting down the states, specific states or what's up, जहाँ पे हमारे losses ज़्यादा हैं या specific product lines, and we'll continue to have some presence in this business if necessary. While I don't say we'll have it, but the whole idea is to scale this business down.
Okay, got it. And secondly, I think you mentioned about looking for some M&A opportunities. Could you help us understand, like, which is it in the CDMO business itself you're looking for M&A, and some more color? Is it for the domestic market play? Is it for exports? And I guess just last clarification was we have 1,500 crores cash on the balance sheet, including the money for the European contract. So fair to understand that 1,000 crore we will not touch, right? So it's only from this 500 and then any other leverage that we may take. So that ring fencing will happen, or that 1,000 also we can use for any M&A?
So money is fungible, है ना? So वो 1,000 crore है with us, है ना? So while the endeavor is we'll have this money with us, but if needed, we can already have an OD facility on the FD we have created on it, right? अब अगर बात करें, इसको थोड़ा सा समझते हैं कि since it's a 1,500 crore, I think it's a good question for the entire group कि हम इसको leverage और use कैसे करेंगे. So हमारे 5 businesses हैं, right? Let's strike it off. कहाँ पे M&A हो नहीं सकता. You cannot do an M&A in trade generics. We don't want to do in APIs, right? So these 2 businesses are off the table. ठीक है. On Acumentis, while we plan to grow it above the IPM at double-digit growth rates, inorganic is not a key lever for us for growth in this business. Partly because this is not one of the core focuses of the group compared to CDMO, and also the market multiples are high in this business compared to the corporate. Okay, so that is one business. If we get something very good and synergistic to our Argumentis, we might explore, but this is not the top of priority for us. अब आते हैं दो businesses, CDMO and exports, जिसमें दोनों में हम we are looking at M&A opportunities. CDMO में specifically अगर बात करें, there are two areas where we have drilled it down. One is जहाँ पे हम capability add करें, right? So maybe a dosage form, a technology which we don't have, and it's a commercially profitable technology which we can acquire, or a product line or a business we can acquire, which will add capability altogether to us. That is one. The second is a CDMO or a similar business wherein we get exposure to newer markets which we currently don't serve. So these are the two kind of businesses we are looking at in CDMO. And within exports, we have shortlisted some of our gold markets, approximately 15 of our countries out of 50 which we currently operate in are gold markets for us. And we constantly will look at if we get some good opportunities to expand our business in those markets. As you know, this is a business of focus for us. We intend to grow at least 20% year on year on this business with current high level of EBITDA margins. So again, this is a business where we can look at M&A opportunities.
And just a follow up on the CDMO for newer markets, I'm assuming that's obviously export market. So we will look to buy a facility as well overseas, or we just want to get market access, so we'll buy some local company with supply from the Indian plant itself, because we do have a low cost advantage, being based in India.
So while we are open to both, honestly, Madhav, but the tilt obviously will remain to control the manufacturing, right? So it should be a facility wherein we can control the end to end of it.
Okay. And just on the API business guidance, could you give us some timeline by when this loss can go to zero? What's the updated timeline there?
See, presently we don't see any timeline जहाँ पे कि हम आपको ये बता पाएं कि हम इसको बिल्कुल जीरो पे ले पाएंगे. इस साल ये लॉस में ही रहने वाला है और probably next year भी, लेकिन but the losses are going to be say half by the end of this year for sure.
Okay. Okay. Got it. Thank you.
Thank you. Next question is from the line of Anand Padmanabhan from PGIM India Mutual Fund. Please go ahead.
Thank you for taking my question. Sir, in FY'24, you had a product development revenue of close to 126 odd crores. Is it fair to assume that in FY'25 you had zero product development revenues?
Yeah, almost zero, sir.
Okay.
Bilkul ठीक.
Okay. And what is the outlook for this particular line of revenues in terms of, is there any visibility of getting these revenues in the coming years?
Coming year, yes, कुछ visibilities है, but हमने उसको factor नहीं किया क्योंकि ये business जो है इस प्रकार का होता है कि जब specific demand आती है उसी समय पे हम इसके ऊपर कोई comment कर पाते हैं, तो इसलिए हमने इसको कहीं पे भी guidance में factor नहीं करके रखा हुआ है, but whenever it will be there, it will be an add-on.
And this product development will typically pertain to the domestic market, right? Or is it for?
No, it is not. No, domestic में बहुत ज़्यादा पैसा नहीं मिलता है. ये mostly जो है वो यूरोप मार्केट और regulated मार्केट के लिए ही product development में जो है अच्छा मार्जिन और अच्छा पैसा आता है.
Okay. और सर जो आपको यूरोपियन कॉन्ट्रैक्ट का जो आपको लॉन्ग टर्म कॉन्ट्रैक्ट मिला है जिसका आपको 100 मिलियन यूरोस मिला है अपफ्रंट, फॉर दिस पर्टिकुलर कॉन्ट्रैक्ट आपको व्हाट इज द अमाउंट ऑफ केपेक्स एंड ओपेक्स दैट यू विल नीड टू इनकर बिफोर FY'27 टू हैव द फैसिलिटी और गेट योर कैपेबिलिटी अप एंड रनिंग?
So इसको दो में तोड़ते हैं. We'll have to get the plant done and we'll have to have the product approved, right? So what we are thinking on these lines that this is roughly a 20 million euro expense for us, wherein we will develop the dossier, register it in most of the European countries, as well as we'll upgrade our plant to get the European GMP. And we are also investing in a new product facility in A11, which is our Baddi 1 facility, wherein we will again set up world-class, high sophisticated lines to serve to European markets and get the European approval.
So this entire cost of all this would be $20 million.
20 million.
Yeah, it will be 20 million.
20 million euros.
20 million euros. Okay. Fair enough. And sir, in terms of on a full year basis, आपके in terms of, you said that the pricing continues to be volatile. So even on a QoQ basis, the pricing in the CDMO business has been negative on a QoQ basis.
Yes.
Okay. So, coming on to FY20, even in FY26, as of now, you don't see any visibility of prices stabilizing.
No. So if you look at large end factors, right, whether you look at amoxicillin, whether you look at cardiodiabetes, telmisartan, and so on. So most of the APIs still continue to be very soft, and these are large APIs that dominate the Indian pharma market, right? Pantoprazole and so on. So currently we don't see that the API prices are stabilizing. Given it's a cost-plus model, this honestly does not impact much on our gross margins, but that is not how the facility operates, right? So it's a constant endeavor that we'll have to optimize our manufacturing expenses, and hopefully these are not the levels which most of the industry would be happy at. So maybe it can take a quarter or 2 quarters or 3 quarters, we don't know, but these are significantly lower prices compared to historic averages.
And since you operate on a percentage margins, historically this has held true even on a rising API price scenario as well.
Correct. Very right.
Okay. Thank you, sir. That's all from my end.
Thank you. Next question is from the line of Pranav Chawla from Ambit Capital. Please go ahead.
Thank you, sir, for giving us the opportunity. Sir, I had a couple of questions. Sir, when do we think we'll be able to EBITDA break even the API business given the current scenario if the prices are stable? Are we still targeting end of FY26 or we expect it to be pushed to FY27?
So अगर बात करते हैं API में almost मतलब most of our revenues what we get is from the cephalosporin. Cephalosporin for a class of drugs which were hit harder, right? Almost 20% का we saw a price erosion, right? While the endeavor on manufacturing optimization, yield, solvent recovery, वो सब went well, but the overall COGS % moved up क्योंकि sale price reduce हो गया. Right, as we tentatively guided that we should be able to bring down the losses by a good fraction, almost if the endeavor is to bring down by 15-20 crores this year from the last year. Right, so this is what the endeavor is, but we might not be able to do positive this year. Right, a lot will depend on how the cephalosporin prices move, which will drive our next year profitability. But उससे अगले साल भी the endeavor is to bring down the losses consistently. So whether it will be 0 for the year or it would be single digit losses, we'll really have to look at because this is a commodity cephalosporin business as of now. हम इसके लिए कर क्या रहे हैं वो एक better question I think. How do we do it? So there are 2 things in parallel what we are doing. One is we are exploring the global market. So as Sandeep sir mentioned that अगले 12 से 18 महीने में the intention is to do 3 CEPs and these will be largely across cephalosporins. Right, do 3 CEPs and get the plant audited and approved by the European authority. So वहाँ पे there are lesser players, few players have CEPs and there are better realizations as well. So that is one thing we are constantly doing. The second thing is domestic, maybe expanding the client base. To ensure that the kind of market which we serve, we are fully entrenched into the domestic market. And cost reduction has always been our focus in this business for the last 2 years. Right, so this is what we are doing. We are very hopeful and positive, Pranav, but at this point in time, you will understand, get into my shoes, you will realize कि एक बार हम break even कब होंगे, this largely depends on the external API pricing scenario.
Sir, and do we have any deferred tax credit from this API business? And if yes, can you quantify that?
Yeah, so it's in front. So, we have had post the acquisition taxes which came in with this business. So we have over 850 crores, close to 879 crores of, tax losses which came in with this business and they continue to be here. And that's something that is the fact.
Are we able to utilize these tax losses as of now, or do we see some time when we'll have to wait for API business to be profitable to utilize these credits?
We should, in the next 4 years, be able to utilize these losses. We had mentioned in our earlier calls that to utilize these tax losses, one of the ways. One of the ways we had done was that we had merged this entity with Pure and Cure, right? So some of those benefits we are getting from our largest CDMO business. So we think we will be able to utilize them in the next 4 years.
Perfect. And one last question from my side, sir. In the opening remarks, we mentioned we had certain excess provisions in this quarter. Do you want to call out what would be the quantum of this?
So we'll give you a broad understanding what are these provisions. So I think a lot of you asked questions around what in the trade generic are we doing. So some of these provisions came in to see that once we are sort of consolidating this business, we try to understand some of these debtors provisions that could be there. So I think broadly for the guidance, it is in line with the strategy that the company is following. So I think that is really where the provisions are.
Perfect. Thank you so much. So that would be all from my end.
Thank you. Next question is from the line of Madhav from Fidelity. Please go ahead.
Yeah, just a follow-up on the export business, where we did about 143 crores in FY'25. I think, could you give us some sense in terms of how the base business can grow? And then also the European contract, which is a very large contract for us, could you give us some timeline in terms of, when does it start and what could be the steady state annual revenue and anything on the margins as well of this European business? If you could give some color on that, that will be great.
So this largely will be this is a 200 million contract on a 6-year basis. So largely, अगर हम बात करें, this will be a 350 odd crores top line business with similar margin profile for us. So this will be a similar margin profile in the CDMO business. So अगर हम बात करें, so this business will fall in the CDMO business for us, right? If we talk about the base export business, which is our branded business, what we do, this, as I said, this is the base business for us. In an absence of any inorganic as of now, this will continue to at least grow in high double digits, 20% growth for us over the next 2-3 years. And the commercial supplies for the European contract will start in 2027, most likely in Q4 of 27, around February, March of 27.
Q4 FY'27. Okay. February, March 2027 is when it starts. Okay.
Yeah.
So FY'28, we should reach the full steady state of 300-350 crores, or it takes some time.
Correct.
To.
No. This is a stable product with a stable market demand. So this is not a new launch. So this will have a stable demand of 30 odd crores monthly.
Okay. And in the next, like FY'26 and FY'27, given we need to incur some cost for, filing the dossiers in Europe, etc., is there any expense that we will put in the P&L for this contract, like FY'26 and 27? You could have some cost coming through, or how would that work?
So this, on the basis of the accounting standard, would work on a composite accounting, right? So the expenses get charged off when the revenue recognition happens, right? Because the enduring benefit will be over the period when the revenue comes in. While there would be capital expenditure which will happen, but as I said, that this will be on the basis when the revenue comes in.
Okay. So FY'26, 27, we're not going to incur any cost. Like it will be sort of accounted for when we start the revenue, right? So that's the way we should think. Yeah.
Yes. So there will be an expenditure, but not be charged to the P&L. That is what I was trying to reply. Right?
Capitalize it. Yeah. Okay.
Yes, we'll capitalize it. Yeah.
Perfect. Got it. Thank you.
Thank you. Next question is from the line of Naman Bhansali from Nine Rivers Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. My first question is on the utilizations level that you've given in the presentation. So on an average, we are varying around 31% to 38% in the FY'25 full year. My question is, why are we running on such a smaller utilization level versus our peers who report around 50-60% utilization levels generally? And is it something to do that we have done a much larger CapEx than our business demand currently persists?
इसमें हमारे बिजनेस मॉडल को थोड़ा सा समझना होगा. हम लोग मल्टीपल क्लाइंट्स के लिए से अराउंड 1400 से ज्यादा क्लाइंट्स के लिए काम करते हैं विद 4000 डिफरेंट प्रोडक्ट्स एंड विद अराउंड 18000 डिफरेंट SKUs. So, or there are so many plants like and all 50-60 dosage forms as well, may it be ampule, vial, injection, वगैरह वगैरह, FFS, large volume, nasal, tablets, capsules, hard gel, soft gelatin. तो उसके अंदर what is multiple products, multiple changeovers. तो number of changeovers जो हमारे सेटअप में हैं वो कहीं नहीं है. तो अगर हम इसको देखें कि कैपेसिटी कुछ एक स्पेसिफिक कैपेसिटी वहां पे भी यूटिलाइज हो जाती है इन चेंज ओवर्स. वन दूसरी बात ये देखिए कि मतलब इट इज लाइक लार्ज वॉल्यूम पेरेंटल्स है, इंजेक्टेबल्स है, जो कि हम 70-80% तक की कैपेसिटीज को अचीव करते हैं. वेयर इन जहां टैबलेट्स कैप्सूल्स आ जाते हैं तो वहां पे कुछ चेंज ओवर्स की वजह से वो कैपेसिटीज को थोड़ा कम यूज करते हैं. इस तरह जैसे हार्मोन फैसिलिटी है तो हार्मोन फैसिलिटी इज रनिंग से एट अराउंड 10% है से 20%, लेकिन वो हार्मोन बिजनेस से ही फुलफिल होगी. The same way when we are going to say make capex on few more businesses, तो वो नई dosage forms के लिए है, like we are going for oncology, we are going for steroids which are not there in our basket. तो वो जो कैपेसिटी एनहांसमेंट है वो डिफरेंट टाइप की डोसेज फॉर्म्स में भी रहने वाली है. एलबीपी वी आर ऑलरेडी शॉर्ट ऑफ कैपेसिटीज, तो उसके ऊपर हम एलबीपी के ऊपर और ज्यादा कैपेसिटीज को बिल्ड कर रहे हैं. तो द सेम वे वी आर गोइंग टू बिल्ड द कैपेसिटीज, और ये कैपेसिटी को हम 40-60 ला सकते हैं, लेकिन इट इज नॉट गोइंग टू बी 100% इन फार्मास्यूटिकल एंड स्पेसिफिकली विद अवर बिजनेस वेयर इन वी आर हैविंग 18,000 different kind of different SKUs.
Got it. So ideally, should we assume that it should be at peak maybe around 40-50% only and not more than that?
No. हमने हर एक लाइन को, हर एक प्रोडक्ट उसको चेक किया है, वैलिडेट किया है अप टू 60%. तो एट एनी पॉइंट ऑफ टाइम वी कैन गो अप टू 60% वेरी इजीली विदाउट मेकिंग एनी एफर्ट्स और विद लीस्ट मिनिमम एफर्ट्स, और 60, 65, 70% तक भी कुछ एक लाइन्स पे जाया जा सकता है. But it is specific to some few lines. कुछ एक लाइन्स को हम 80-85% तक भी ला सकते हैं.
Got it. Understood. Second question is on CIFA. Given it's a very competitive market as well as commodity market, so also given that we have almost 80% of our business from CIFA in the API side, so are we looking to enter into any other different API segments or any other different API that we are looking out to diversify this segment, and which might help us get more margins quicker?
See, we do have two different plants. One is meant for cephalosporin, as ये एक कैटेगरी है cephalosporin की, तो फार्मास्यूटिकल में we cannot manufacture anything other than cephalosporins in the specific plant. तो हमें उस प्लांट को cephalosporin की ही स्ट्रेंथ जनरेट करके उसको प्रॉफिट में लेके आना होगा. और जो दूसरा प्लांट है उसमें भी हम कुछ एक प्रोडक्ट बना रहे हैं और वो भी हमारे रेगुलरली बन रहे हैं, और वी आर इंक्रीजिंग द वॉल्यूम इन दोज प्लांट्स एज वेल.
Got it. And lastly, on the international business, so this year I think we grew around 14%, and so is there a scope here to grow at more than that range, around 20%?
Yes, पूरा स्कोप भी है और हम डेफिनेटली उसको अचीव भी करने वाले हैं. इस फाइनेंशियल ईयर में भी हम इसको अचीव करने वाले हैं.
Got it. Sir, on the dossier side, this year we are almost 70 approvals versus last few years.
Sorry to interrupt, sir. Can you please move to the question queue for follow-up question?
Sure.
Thank you. Next question is from the line of Dhiresh Pathak from White Oak. Please go ahead.
Yeah, thank you, sir. So what will be the capex in FY'26?
Right. So, we had given, last time we have said that we will be going to Jammu. So we've broken down our capex into maintenance capex and, growth capex. The maintenance capex would also take, upliftment of the entire thing. So we are looking at almost a 300 crore capex in this year, of which we think close to 100 crores, one-third of the total capex will go into basically maintenance and modernization, and the growth capex would be on 200 crores for the year.
And this 200 crore, where are we spending the growth capex?
एक तो हम जम्मू में लगा रहे हैं, उसके अलावा हम एक लिक्विड ओरल की लाइन हमारे को अपने यूरोपियन ऑपरेट जो बिजनेस हमको मिला है उसके लिए हमें एडिशनल लगानी है. ऑल्दो वी डू हैव ए लाइन, उसके अलावा जो करंट लाइन है उसको भी हमें मॉडर्नाइज करना है, तो उसके ऊपर भी हमारा इन्वेस्टमेंट आएगा. उसके अलावा हम ऑन्कोलॉजी और स्टेरॉइड्स की फैसिलिटी भी लगा रहे हैं.
Okay. So in the cash flow, there is a significant increase in principal payment of lease liabilities from last year, 52 crores versus 8 crores. So what is that related to? Lease facility?
Lease liability.
Am I audible? Hi. So this means, this is basically for one long-term facility that we have taken to have basically a place as a guest house for people to be there, because a lot of people visit from various places to Haridwar, and that's where that liability has increased, because it's a long-term long-term lease liability that we have created over 30 years.
Guest house. Okay.
Yes.
Okay. Thank you.
Thank you. Next question is from the line of Gautam Gosar from Monarch AIF. Please go ahead.
Hi sir, thank you for the opportunity. Sir, I have a question on your utilization levels, and since you explained that, I just wanted to understand, if you have so many facilities already running, can you please highlight which of your facilities are north of 55-60% utilization levels?
इसको फैसिलिटी वाइज फैसिलिटी देखें तो अगर हम नाम के साथ नहीं बात करेंगे, हम डोसेज वाइज बात करेंगे. जो हमारी जो ओल्ड फैसिलिटीज हैं इंजेक्टेबल्स की, वो 70-80% के ऊपर चल रही है. लिक्विड ओरल की फैसिलिटी भी 70% से ऊपर चल रही है. वाइल ओएसडी फैसिलिटीज की बात करेंगे तो वो अराउंड 40% के आसपास ऑपरेट करती हैं. और जो नई फैसिलिटीज आई हैं, लाइक हमने जो A12 बनाया है, जो इंजेक्टेबल की फैसिलिटी है, वो विच इज रनिंग मोर लेस देन 5%, बिकॉज अभी उसके अंदर बिजनेस को ग्रो करना बाकी है. द सेम वे जो पैनम की फैसिलिटी जो हमने कोट द्वार में लगाई है, वो भी अराउंड 10% के ऊपर ही अभी ऑपरेट कर रही है. तो उसका पूरा का पूरा लिवरेज लेना अभी बाकी है, क्योंकि अभी वो नई फैसिलिटीज अभी क्लाइंट के इंट्रोडक्शन चल रहे हैं, प्रोडक्ट डेवलप हो रहे हैं, प्रोडक्ट डेवलप होकर उसके स्टेबिलिटी डाटा जो है वो तैयार होते चले जा रहे हैं.
So sir, except for the new facilities, all our old facilities are north of 45-50% utilization levels.
जो ओल्ड फैसिलिटीज है, यस, वो हो सकती हैं, लेकिन हमारे को ये भी देखना है कि हमने जैसे प्लांट 1 को हमने अभी डेडिकेट किया है एक्सपोर्ट्स के लिए, उसके अलावा प्लांट 4 जो है वो हार्मोन्स के लिए किया है, तो वो स्पेसिफिक टू द डोसेज फॉर्म हो गया.
Okay. I think then the blended utilization levels should be much higher than what we are reporting, around 30-40%.
I couldn't get you.
Can you repeat your question? Your voice wasn't as clear.
Basically, if all our old facilities are north of 45-50% utilization levels, then the blended utilization for us should be like more than 40-50%, which currently is around 35-40%. So I cannot understand where the gap is coming from.
No. So let me reclassify. So जहाँ पे inherent challenges with a few facilities that the overall market volumes are low. So जो हम hormones की बात कर रहे हैं, that operates at sub 20%. And similarly, plant 1 we have reserved for Europe, where we are still building volumes. So उसको वैसे देखना पड़ेगा. So most of our old facilities, अगर हम उसका blended average देखें, तो that comes out to be 40%. Okay, now we have added capacity. As you see, over the last 4 years, we have added almost 1/4 of our capacity. We have added to our list. This is across these dosage forms which we report, right? Some are, injectables we are operating at almost 50% plus. If you pick up the RHPC plant 3, we were higher, right? But now you see it's gone down to 32% because naya injectable facility obviously which is larger in terms of the units that we produce, brought down our utilization for injectables to 32%. Similarly, the kind of investments we are doing in oral liquids has brought down our oral liquids, although oral liquid is a seasonal business. So जब हम देखते हैं in quarter 3, it spikes up, and hence we have to keep a headroom, and hence the overall utilization gets low. So while we can look at an average level, we have to really think through what is the seasonality and what is the formulation type before we say. Blended level पे अगर बात करें, most of our capacity, as you could see, is for oral solids, which with high changeovers and client needs, वो एक currently हमारा 35 से 40% के बीच में है, depending on what quarter we play in. जो full year number आया था वो 38% आया था. This, what we are saying is, given in oral solids, we can move up to 50-55%. If we stick here, don't do further capex, over the next 2-3 years we can do it, but एक plant लगाने में it takes almost 2 years to bring up, get the WHO GMP and validate. So, and adding capex, if we see a business is growing, is always a wiser decision to plan in advance for at least 24 months. And hence वो एक base denominator आ जाता है, but वो volumes constantly increase होते हैं.
Okay. Secondly, on the domestic formulation business, so on an overall IPM level, we are seeing a restricted growth of around 8-9%. So how should we look at our business of domestic formulations, and what growth can we expect from this business?
बिल्कुल. So this is a business which we are targeting. If you really see through, हमने इतना price hike नहीं लिया इस साल. Obviously, right. So we are focusing on building branded play, wherein we have a prescription-driven play. Right. So this is a business where we are targeting a double-digit top-line growth, which will be higher than the overall Indian pharma market.
Okay. And lastly, sir, you mentioned about your API losses, which are coming down.
Sorry to interrupt, sir. Could you please rejoin the question to follow? Thank you so much. Next question is from the line of Dhiresh Pathak from White Oak. Please go ahead.
Yeah, sir, thank you for the opportunity again. Sir, ये जो European client के लिए that contract that we have, if you can just explain कैसे इसको अकाउंट करेंगे एक बार दोबारा से, I don't have that much clarity. So cash flow कब आएगा, कब आएगा, and how will it run through the P&L, and what sort of cash margins are we expecting to make here?
हाँ, तो सुमीत है, मैं समझाता हूँ. तो जैसे हमारे पास पार्ट पेमेंट आ गई, ठीक है, तो लाइक संदीप was explaining कि हमारे को काफी चीजों में इन्वेस्ट करना पड़ेगा. We'll have to take the plant approval, we'll have to take the product approvals, we'll have to put in some capex in the plant. Now, all this investment will continue to happen, which will not be charged off because there is no commensurate revenue which is coming in, right? While the cash flow has come in, that is cash which has come into the books of the company. Now, when starting, let's take the way the contract is structured. On 1st April, we will probably be starting off the billing. For the whole year, we will probably, whatever revenue will be there will be a part which will get adjusted against the payment which has come. And there will be a part which will be adjusted against the expenses that we have made. Right? So the accounting will only start happening when the revenue will start getting recognized on this contract. So that's how the accounting will work.
Okay. So how much cash has already come in, sir?
So the way when we mentioned, we got 100 million as part payment for the contract.
100 million
Euro.
So where does it show up in the? You would have put it on the liability side on the balance sheet, right? Where does it show?
So not on the 31st, no. So it came on 9th of April, right?
अच्छा, okay.
So this is a subsequent event. अगर आप net surplus देखोगे तो आपको number 566 दिख रहा होगा. कैश और कैश इक्विवेलेंट. तो अगर हम बैलेंस शीट से इसको रिकंसाइल करने की कोशिश कर रहे हैं तो वो अभी हम नहीं कर पाएंगे ना, क्योंकि वो पैसे नॉक हुआ है.
अंडरस्टूड. एंड सर इसमें क्या मतलब जैसे what kind of margins that we expect to make here? Like in the domestic CDMO, we make a certain set of margin. There is certain working capital requirement, right? So how the economics different here in this business?
से इसमें क्या है कि ये वैसे तो यूरोप में बिजनेस जो आता है उसमें काफी अच्छे हाई मार्जिन होते हैं, लेकिन क्योंकि ये बिजनेस हमें हर हाल में ग्रैब करना था, इट वाज द वेरी फर्स्ट बिजनेस, और जो कि हमारे को अराउंड 20 कंट्रीज के अंदर एंट्री भी दे रहा है, साथ साथ में हमारे को जो इन्वेस्टमेंट इन टर्म्स ऑफ गेटिंग अप्रूवल्स एंड वो सारा भी हमारे को पार्टी से रिम्बर्स हो रहा है, तो इसलिए हमने यहाँ पे मार्जिन के ऊपर उतना फोकस नहीं किया, और इट इज समवेयर अराउंड 15% मार्जिन जो हमें नेट मिलेंगे, ऑल्दो वी आर एक्सपेक्टिंग के बाकी यूरोपियन बिजनेस में वी विल बी एबल टू ग्रैब मोर मार्जिन.
ओके, ठीक है सर, थैंक यू.
Thank you. A reminder to all participants, you may press star and one to ask questions. Next question is from the line of Naman Bhansali from Nine Rivers Capital. Please go ahead.
Hi, sir. Thank you for the opportunity again. I was just following up on the dossier side for our export business. For FY'25, we have around 70 dossiers, which used to be much higher over the last 3 years, around 130 to 40 over the last couple of years. Now, does this has any impact on the growth going forward in terms of newer dossier approvals reducing this year significantly?
नहीं, so let's थोड़ा सा इसका हिस्ट्री देखते हैं. This is largely on account of years of R&D and dossier filing that happens through, right? So we think of a dossier, we go develop it, file the regulatory approval. So for example, it differs by country to country. Some countries give approvals in 6 months, others can take as long as 3 years, right? So this is an outcome event that we have received 70. As I mentioned, we are also focusing on fewer gold markets, so the number of countries where we file dossiers have also reduced, क्योंकि we are now largely targeting which markets we can go deeper. But this certainly has no impact on the growth. Neither we are saying we are slowing down on the exports. We are constantly investing in our R&Ds and developing high quality products specific to the markets which are of focus to us.
Got it. And secondly, on the management side to a bit, this year I think we have received a resignation of the CDMO CEO personnel, as well as last year I think the domestic formulation CEO resigned. So where are we looking at the hirings from these two perspectives?
वैसे तो किसी भी इंडस्ट्री में एट्रिशन एक नॉर्मल प्रोसेस है, और उनका एक मतलब बिकॉज ऑफ हिज पर्सनल रीजन ही वांटेड टू गो, तो बाकी ऑफ कोर्स वी आर इन द प्रोसेस ऑफ हायरिंग फ्यू की पीपल्स, और लेकिन हम राइट पीपल के लिए ही हमेशा सर्च करते रहते हैं. तो ऐसा नहीं कि भाई मतलब अगर एक पोस्ट को खाली फिल करना है, बिजनेस तो चल ही रहा है, लेकिन हम बिजनेस को और अच्छे से प्रोफेशनली मैनेज करना चाहते हैं, थ्रू प्रोफेशनल्स मैनेज करना चाहते हैं, तो हम जो भी लोग लेके आएंगे वो बेस्ट इन क्लास ऑफ द इंडस्ट्री होंगे, उन्हीं को हम लोग आइडेंटिफाई करने के प्रयास में हैं.
Got it, sir. Thank you.
Thank you. Next question is from the line of Gautam Gosar from Monarch AIF. Please go ahead.
Hi sir, thank you for the follow-up. So my question is on the API business. So what level should we see the API business breaking even? Like, can you quantify a number of these levels it can break even, and what growth are we expecting? So earlier I think we are expecting a much higher growth, and are we seeing any slowdown in this business now?
So I'll rephrase, paraphrase what we said earlier. Essentially, so the top line growth is what we're targeting at 10-15% growth, but that is not the key focus. The key focus is how do we reduce losses and move to a path of profitability, right? So last year we did over 40 crores of EBITDA losses, which we think this year will be in the range somewhere around 25 odd crores. But this will largely be driven from how the external market plays in terms of the cephalosporin prices. While the endeavor is to increase the share of general products as well, but this is how it will plan out. So FY'26, if I say, we'll still be in losses, but the losses will be significantly curtailed down. FY'27 is an year which we think might be break even or single digits of EBITDA losses.
And what revenue can we break even?
So exactly to I'll rephrase. So revenue यहाँ पे जो है is cephalosporin has come down. So अगर वहाँ से आपका meaning है कि on the capacity utilizations we are still decently capacity utilized, almost 1/3 capacity utilized है. We can do 2.5x from the current levels of our capex which has gone into. To a point, यहाँ पे हम कहाँ से break even करेंगे? This is we currently do roughly 200 odd crores. I think once we do almost 2x the size of the current revenues, we'll be better off in terms of a profit-making business.
Okay, got it. Last question on trade generics. How much working capital is blocked over there? Can you quantify the inventory write-offs taken in this quarter?
So, we have given a broad guidance on this. As I said, that this is something that we, as a part of our strategy, are looking. But if we really look at what is the sort of working capital, this is not much overall in our business. If we look at the total, trade generic business, we have, say, close to 45-46 crores on debtors. We have 18 odd crores which is on the inventory and 35 crores on basically creditors. So there isn't much on the working capital. We have made a decent provision, and I don't think there will be any large hits going forward.
Okay. Thank you, and all the best.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments.
Thank you everyone for attending Akums Q4 earnings call. If you have any remaining questions, you can reach out to the investor relation team. Thank you and have a good day. Namaste. Namaste.
Thank you. On behalf of Ambit Capital Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.